Morning, Steve Ray in Chicago with the morning grain comments. Well, let's go through the list of all the things the markets are trying to digest and come up with price discovery. First of all, overnight, soybean prices are up about 3 cents, corn's up a penny, wheat's about unchanged. For the week, wheat prices are down about 16 cents, corn's up 3, beans are up 3, and oil's up about 45 points. First of all, we've seen a lot of stories about U.S. and China getting closer to a deal, a 6-point agreement in which China looks to resolve some of the issues with intellectual properties and come in buy ag products. There was also talk about $30 billion annually that China will buy from ag products. That includes corn, soybeans, maybe wheat, sorghum, DDGs, ethanol, could be some meats, could be some liquid natural gas, and could be some rice. But yesterday, during the talks, there was a little bit of a problem in that the Chinese negotiators were claiming they didn't quite understand all the language of the final document. So we don't know if things are on hold or if they're moving along at what is expected to be a normal, fast pace to get a deal done. Today, President of the United States will be meeting with the chief negotiator of China. Not sure exactly what the discussion is going to be about. Some people had hoped that they could finalize a deal so the two presidents could soon meet and sign a deal. Now, obviously, this is a big deal for ag, because if they come in and buy $30 billion annually of ag products versus $19 billion they bought in 2017, then two things could happen. You could see a little bit higher prices in the grains for farmers, could get some more trade volatility in the marketplace, and over the next 5 years, farmers may not need to cut acres. And this includes reducing some of the competition from soybeans from South America, corn from South America and the Black Sea, and wheat from the Black Sea, if China is committed to buy this versus buying it from our competitors. We also note that the Outlook Conference came out this morning with some 2019-20 supply and demand numbers. For corn, the estimated stocks at 1650 versus 1735 this year. Beans, 845 versus 910, and wheat 944 versus 1010. So those numbers are probably a little supportive underneath the market today, even though most of these numbers are for budget reasons for Congress and the budget office. We've got December crush today. Average guess is 182 versus 176 last year. Got a cattle on feed report that shows cattle at 102% and placements at 101%. We also have weekly export sales, and this is accumulation of everything that they haven't reported to date. So we're expecting 2 to 3 million tons of wheat, 4 to 7 million tons of corn, and maybe 6 to 9 million tons of beans. Weather-wise, Brazil weather looks good. South America, as far as Argentina, their weather still has some rains moving into the growing areas in the next 2 to 3 days. Here in the United States, you have a portion of the southern delta into the Ohio River Valley that's really wet. We were there the last couple of days, and it's pretty soggy. And so the forecast is more of the same, at least through the remainder of the month of February. So those areas are going to need to dry out to get the wheat crop growing properly, get the early spring planting conditions improving. We also are noting in those areas high waters is reducing barge traffic and reducing some of the logistics of moving cash grain. Certainly the cold weather across the Midwest, which is also expected to continue through the month of February, is also slowing cash movement and raising some concerns about logistics. Yesterday, funds buyers of beans, oil, meal, big buyers of corn and wheat. We estimated that right now they're still long a little bit of beans, even oil, short a little meal, short corn, and short wheat. So again, not a lot of trading going on until we know more about this U.S. and China trade issue. But some of the USDA numbers, some of the export sales data, some of the weather that's going on in the United States could bring in a little trading and a little bit of volatility. If there is a rally in the grains because of this trade deal, let's say going back to $9.40 in the nearby beans, $4 nearby corn, $5.40 in nearby wheat, I think farmers should take advantage of that and sell cash. Not only it's in the inventory and storage, but also 19, and maybe look at the carry for 2020. Because if we have normal weather this year, our stocks will still be adequate and prices will go down in the fall. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.